Most traders spend all their time looking for the perfect strategy. Professional traders look for the perfect combination of strategies. One strategy might work great in trending markets, another might perform better in chop, another might thrive during volatility. That's where portfolio level testing comes in. Let's take a look. Inside the strategy desktop, all of your strategies are listed here in the desktop strategies grid. Rather than testing one strategy at a time, we can combine multiple strategies, multiple symbols, and even multiple time frames into a single portfolio. For example, I could run a trend following strategy on the S&P, a reversal strategy on gold, and a breakout strategy on crude all at the same time. Now this is where it gets interesting. When we run a portfolio backtest, we're no longer evaluating strategies individually. We're evaluating how they work together. Does one strategy offset drawdowns from another? Do they all lose money during the same market conditions? Does combining them create a smoother equity curve? These are questions individual strategy testing can't answer. Once the backtest completes, Tickblaze automatically aggregates all the data. We can review combined profit and loss, portfolio drawdown, risk metrics, equity curves, and overall performance. We can also drill down further and see performance by symbol, by strategy, or by period. This makes it very easy to identify which strategies are carrying the portfolio and which ones may need adjustments. At the end of the day, professional trading isn't usually about finding one perfect strategy. It's about building a collection of strategies that work well together. Portfolio testing allows you to see the bigger picture and build a more robust trading operation.